All right, good afternoon, everyone. If you don't mind, let's just do a quick audio video slide check here. Just make sure you can see and hear. If you don't mind, yeah, just type a Y in the text chat or the question box, I guess, in GoToWebinar. All right, looks good. All right. So again, welcome to this presentation hosted by FFR Trading. My name is John Madison. I'm the VP of Marketing here at FFR Trading, and I'll be your host for this special webinar, Mastering Market Volatility, featuring Wendy Kirkland. We'll talk with Wendy in just a moment here. Feel free to post questions during the presentation, but we'll also have a formal Q&A after Wendy's done with her part of the presentation here. All right, you should see the risk disclosure here. You're all aware, trading, investing, it's risky business, right? That's why FFR exists, because most people fail trying to do this themselves. And that's why we try to pair you up with proven traders like Wendy with proven track records and help you diversify among different strategies to help mitigate that risk. All right, some of the topics that we want to hit on today, we're going to review, again, who we are here at FFR Trading, what our role is. I'll bring in Wendy here in just a moment. She'll have her presentation that she's got for you, and we'll do the Q&A after that. We'll review the trading academics of both her premium and her entry-level systems and the differences between those, and all the what we call learn and earn program that comes with all her different programs here. So who are we here at FFR Trading and what is our role? So we are a boutique vetting firm. We've been evaluating traders and their strategies for over 15 years to find veteran traders with proven track records. So each trader and strategy has to go through what we call our 8-step certification process before that trader is allowed to provide their services to our clients here at FFR Trading. It is a very thorough process, includes doing background checks, getting their brokerage statements. So they actually have to prove that they make money doing this. So let me bring in Wendy. Now, Wendy, you have a pretty unique story. So good afternoon. You're in East Coast time with me. I'm here in Florida. I think you're in North Carolina, correct? Oh, my bad. It would help if
there we are. Now I can speak. Now you can hear me. Yes, I am in North Carolina, in the a little bit north of Asheville. So I'm in the mountains.
Oh, okay, beautiful country there. So, I'm not going to give away too much about your story because I know it's part of your presentation because it's a pretty unique story. You didn't come through most of our traders have an institutional background. They're either proprietary traders or they work for banks or, came up that way. But that definitely was not your route. And I'll let you talk about that as you get into your presentation here. So guys, in this presentation, Wendy will be taking you inside her setups to see how they help her master market volatility with her premium and even her entry-level trading strategy. So Wendy, I'm gonna switch over to you.
Okay.
And then we'll be able to see your charts. All right, I can see I've got your slideshow up here.
All right, there we go. Excuse me. I'm so happy to be here. I'm excited. This is one of my favorite things to do, is to talk to people who are interested in learning to trade options. And part of that is because I did not come to trading options the normal way. I did not have a financial background. I'm an artist, and my husband and I owned a gift shop in Asheville in the Biltmore Village area, which is real close to the Biltmore House. And we sold some of my artwork. We sold decoy ducks that he carved and I painted. And then out of the blue, there was this crazy flood. It does not flood in North Carolina. Again, we're in the mountains, and there was so many things that happened. There was a dam that broke. There was a river that clogged. There was a hurricane rain that came through, and there was just nothing we could do. And we did not have flood insurance. We were just kind of going from week to week, and it was a disaster in a sense. So this is something a little bit different. This is a book that I've written, and I've written it partly because of that flood. And I'm just only going to mention this briefly in that it reflects my attitude toward the things that happen in my life, and also about trading, that I know positive things for myself, no matter what happens, like the flood, that I don't understand when it happened. It didn't seem like a good thing, but in the end, it was a blessing. And I feel so strongly about this, about not letting negativity or negative events define who you are or what you expect. Look to it and know that something positive is going to come out of it. So I took the money that we had set aside for the electric bill, because the electric was off anyway, and I took some classes on option trading. It was so brief. It was like 5 classes, 1 a week for 5 weeks. I won some, I lost some, I won some more. And then ultimately, I learned, I guess you'd almost say I discovered patterns that told me a story. And after about 9 months of drying out and the repairs and refurnishing, the shop opened back up. And Jack ran that, and I traded. But it truly, truly worked out that that flood that seemed like a disaster in the beginning was a miracle. It truly was a blessing. He ran the shop, and I traded options from the mountaintop. And so this is where I am right now. The rainbow is not a current picture, but this is exactly what it looks like. I sit up here on top of my mountain and I trade options. And this is what I teach other people to do. So along the path of learning to trade options, because I look at charts differently than somebody who has this financial education and background, and they all think exactly the same, I started seeing things and seeing them differently. And I could see bullish patterns that I call the P3 patterns, and then the P3.5 patterns, which are bearish patterns. I saw that they went through what I call a life cycle. They are conceived, and then they become, are born, and are an infant, and then a toddler, and so on, until they become an adult. And so this is what I teach other people, because every single chart you look at, it doesn't matter the time frame, the equity, whatever, they go through these patterns. So I'm going to do this in a very simple way of just showing you overbought and oversold as far as the general market. And you can see this on an indicator that is called the Channel Commodity Index, or the CCI indicator. And so the Channel Commodity Index, CCI, can be put on all charts. It is easy to read and tells you the general market direction, so that if you're looking for bullish trades, it is going to clue you in very specifically where to put your focused attention. It shows overbought, oversold concept, and it can be done on any time frame of chart. So after having said that, I am at the moment here showing you, this is September 5th and this is September 8th. The volatility has been crazy lately. Swings up and down every single day and just has been driving most people who don't like volatility a little bit crazy. So here you can see that the Dow, this wick up here on this candle shows that it was positive when it opened, and by that time that candle closed it was negative and went back and forth, dropped more, up, down. Here you have the NASDAQ, open down, rose, and back and forth, and the S&P and the Russell are kind of in between. And then here, a couple days later, we have positive, back and forth, went negative down here, and then started rising again. The volatility has been such a challenge because most people, to make money doing trading like this, you would have to be able to day trade. You would have to get into a bullish trade here and then hopefully stay flat, maybe a bearish trade there. It is just really, really hard. This is today, which was one of the very first super positive days that we've had in a good while. And so this is not the actual end of the day. I took it just before 3 o'clock, but you get the gist that it was up 300 plus points today. And yet you can look at the NASDAQ here and look that it opened up, went down here, went negative a little bit after 10 o'clock, and then positive again, back and forth, back and forth. So you have to be able to get so that you absorb the information and be able to interpret this and how you're going to be able to put it into a viable trade. Okay, so discussing what we're saying here about volatility, this is a weekly chart, which gives you the big picture of the market. Each one of these candles on the chart here is a week. So going back into last year, you can see that there was 7 bullish candles here with a couple little bearish ones in between. And then this really long flat period where it just was up and down, up and down. Then it pulled back a little bit and went up for 5 weeks, back and forth, back and forth. This is just really, really flat. And this is, again, a picture or a reflection of the volatility of things swinging back and forth, back and forth. That here is kind of a close-up of the same chart, not quite as long, but you can see here was a period where there was 5 up weeks out of 7. And here is 3 up weeks, another 3 up weeks. So one of the things that I want to draw your attention to, and I was talking about an indicator that gave you general information that created an overall picture of what is happening in the market, is that CCI indicator, Channel Commodity Index. And I have this one set at 21. And so the way this is read is you can see there's this dotted line here. This is the 0 line. Up here is 100 and down here is minus 100. If the index runs up over 100, it creates this green fin. And if it drops below minus 100, it creates a brown fin. I kind of call these, I call them fins because it makes me think of a dolphin or something, you know, where it's the fin is up above the water. And so this is bearish. Here it crosses above the minus 100 line, and that is suggesting then that it has gone from being bearish up here toward the 0 line and being more bullish, then kind of flat, drop back down again. Here it crossed up one more time, and this is where then it went into bullish territory above the zero line and is bullish and creates these green fins. So I don't have to say a whole lot more than I'm sure that at this point you have the general gist. And so when it gets up here and is in bullish territory, that is really suggesting that there is strength behind the upward move. So here is a daily chart of the Dow, and this is today's candle here. You can see that we had gone here. There's the rise in July, created this green fin. Then it dropped down. You can see candles here, flat, flat, but you can see this is telling you that this was heading into bearish territory, and then down it went, creating this brown bearish fin, and then came up here again to the zero line and had trouble getting through, pulled back again, and now has crossed up and over. So this is suggesting that things are getting stronger and more bullish. Okay, here is a chart then. The equity is Dollar Tree, DLTR. And again, still a daily chart. But this again gives you a pretty clear picture that we were bearish. Then it crossed up over the minus 100 line. That kind of shows you that the strength of being bearish is changing. Hasn't actually turned to being bullish yet until it crosses the zero line and come up here, and then now it is in bullish territory. Here then it heads down and eventually crosses below the zero line and goes back into being bearish. So this paints, again, a pretty clear picture of what is going on. So this is just one of the indicators that I use in interpreting what I expect to help and happen with trades, that I use this to create a picture to tell me when things are going to start changing and that I could consider getting into a trade. Again, my approach and what I teach is different than someone who is highly financially educated. I teach in a way that is understandable, that being an artist, I think, helps me to see things differently. I look at a chart like this one, and it is telling me a story, and this is what I teach. And so the main patterns that I trade and teach are the P3 patterns, the P3 and the P3.5 pattern. And so on this chart, I have two ADX indicators, a PPO and another ADX indicator. And the ADX on the top and the PPO create one pattern, that is the bearish pattern. The PPO and the lower ADX create the bullish pattern. And so what I was explaining earlier about the patterns creating a life cycle, what I started seeing on every single chart, no matter what the time frame was that one pattern conceives the other pattern, and that new pattern then goes through a life cycle of like 6 stages. That's what I have up here. So this is a P3 pattern. This is a P3.5 pattern that has conceived now a new P3 pattern, and that is the way that it goes. And if ever a pattern fails, and I'm saying that because right here you can see there is 2 kind of circles here on the lower side. Whenever a pattern fails, the previous pattern that conceived it conceives a new pattern. And so you know 100% of the time what is going to happen next. And this is what my books and all cover and explain. So here's another example. This is Mosaic, MOS. Here you have a P3.5 pattern, and it plays out and it conceives a new P3 pattern. This P3 pattern goes through its life cycle, and I didn't draw a circle here, but it creates a new P3 pattern. And then when the P3.5 I said P3 pattern, P3.5 pattern, when the P3.5 plays out, then it's going to form a new P3 pattern. And that is the way that it goes. Here's the P3 pattern right here that conceived this one. So back and forth it goes. And so you can look at any chart, any time frame, and you are going to know whether it is in a P3.5 pattern or a P3 pattern. And then once you know which of those two patterns it's going to be in, then you know it's going to flow through its life cycle. Okay, so this is relating to the Gemini. I have two services. One is Gemini trades the P3 patterns and the P3.5 patterns. And it gets in, if you want to say, at the level 4 of that pattern. And again, I think of this as life cycle, so that you again have where it is conceived and then where it is born. And this one is just getting ready to be born, where the PPO crosses up. And then it goes through the life cycle of being an infant, a toddler, a teenager, and then an adult. And it flows through the patterns. And then when it becomes an adult, it conceives the opposite pattern, the P3.5 pattern. When that pattern is born and then goes through its life cycle and becomes an adult, it conceives the P3 pattern. And that is the way that it flows and goes back and forth, back and forth. So the Gemini, as I said, gets in usually at what I would consider a level 4. That is like a toddler, I guess you would say. Level 5 is the teenager, and teenager, it is showing a little strength, but sometimes it's like a wobbly period where maybe there's just a little bit of selling, and so there's a little wobble. It doesn't destroy the pattern, but it's a little pullback because teenagers act out. And so that is part of it. And then it goes into the strength stage, and that is where there is strength going into the pattern, and it goes through all the way to the end. And then when it starts rolling over, that is when you close the trade. And again, before it even gets to that point, it has conceived the opposite pattern. And so on this chart, you can see I have the same CCI indicator. Here's a P3 right here that formed. And then this is where the DI lines of the ADX crossed up and over. This would be pretty much like an entry on this particular trade. And then it goes into the strength stage, which would have conceived a P3.5 pattern. And then that P3.5 pattern goes through its adult stage, and it has conceived this new P3 right here. Sometimes traders call these pinches. I call them squeezes, but you can see the lines here kind of squeezed together or pinched together. Here they have pinched together again, but it's not quite as tight as that one, but it doesn't matter. It has exactly the same elements, that you have the PPO crossing up, the ADX here heading down, and then ultimately the green line crossing up. Here the green line is crossing up very quickly after the PPO is crossed up and the ADX is heading down. But again, what is taking place here is exactly the same thing that took place there. So this is what I teach. This is what you learn. You end up getting information about the trades and the patterns, and ultimately you get it, you understand it. So this is what actually happened on that trade. Here's where I was saying the lines kind of pinched together and the green line crossed up, suggesting that it's bullish and things are taking off. And the line's headed up, and here is this rise. And again, it is, I'm not going to say simple, that's not, but it's easy for me to be able to teach people and have them be able to put the information together. Again, you can look at CCI and see that it was bearish and it ended up being bullish up here. And this might stay for a good while before it starts heading down. So here is some bearish patterns. Again, this is showing that there was a lot of volatility and switching back and forth. You see the candles back and forth. And then it went into the strength stage of the P3.5, and look at price, down it goes. Here's another one. Here's the P3 played out, then it goes into the P3.5 because adults conceive the opposite pattern, and you have the drop. So the other program is the alpha. We were just talking about the Gemini program. The alpha trades the P3 patterns, the P3 and P3.5, but instead of trading the whole kind of life cycle of the P3 patterns, it focuses on what I call the strength stage or the adult stage. And so here is a strength stage, excuse me, of the P3 pattern, and you can see what's happening. The EMA is crossing up and heading up, and price went up. Here is the strength stage of the P3.5. What's happening? Price dropped. And so again, this is information that I share. You learn from the trades that are information that is sent, and it's pretty easy to eventually interpret the information and be able to look at the chart yourself and be able to pick out the patterns you're learning from it. So FFR Trading is going to, here in a few minutes, we're going to share some extra information, but I want to say that it doesn't matter if you're the greatest trader in the world. You'll never make a dime if you don't believe in your own abilities and you believe that you will be able to learn to trade on your own. On the flip side, you could be the worst trader in the world, but if you believe in yourself and if you believe in your abilities to get better, you've got a great chance to turn things around and to succeed. And I want to do everything in my power to help you become a successful trader. That is what is important to me. I offer tested programs that include books, and I share when I see trades and patterns begin to form so that you can learn and earn from the shared information. You'll get the opportunity to learn from the trade alerts generated by my systems. You'll know from the recommendations what you could buy, when to buy, and what price, and then when to sell. I have found the single most important characteristic of good traders is someone who believes in themselves. They know they can succeed and they take action. That's what the Knowing is Seeing book is all about. Knowing you as a person have got what it takes to succeed because you're awesome and you can do this. All right, I guess I'm ready for the next portion of this.
Yeah, great stuff, Wendy. Really appreciate the presentation. And one of the things, just feedback on our end here at FFR, when we talk to your students, they really appreciate your teaching style because it's not so, call it technical. You have a style that's very engaging. You are able to communicate, some difficult concepts in a way that is more visual, I think, and people tend to respond to that. But we do have some questions for you.
Okay.
Glenn wants to know, the Thinkorswim platform evidently doesn't contain the PPO indicator. Is there a substitute that people could use if they don't have access to the PPO?
Yes, the MACD. Some people just call it the MACD, but MACD. And they have that. They actually have the PPO, but it's not something that's on their list of indicators. But there's been enough people that have requested it that somewhere in their messages or something is the criteria for setting it up. But I don't know exactly where that is. But
And Robert wants to know if you can address the trading activity, what you're seeing in terms of when you talk about volatility. Does volatility mean more trades or less trades? How does that affect your programs?
Well, it depends on what time frame chart you're trading. That my programs, Gemini and Alpha, trade daily charts. And so the daily chart, like we were looking at, kind of levels out some of that volatility. We're looking at patterns, and the pattern says that it's going to go up. Maybe it'll have a down day. Maybe it'll have 2 down days, and then it goes back up again. Unless the pattern fails, it is going to ultimately go through its stages. So if you're day trading and trading a much shorter time frame chart, you would be trading the patterns, but on a much shorter chart that would go through its pattern, maybe in the morning, and then P3 half pattern in the afternoon, where the services trade the daily charts, and they kind of level out some of that. Now we're going to ultimately talk about some of the other programs, and they trade 30-minute, 60-minute, and daily charts. So there's a little bit more of the shorter time frame chart opportunities.
All right, great. Peter from Australia, welcome, Peter. I don't know what
Hi.
time of day or night it is there, but I appreciate you being on. Wants to know, do you use automatic stops on options? So how do you manage the risk?
In a sense, risk is kind of a personal decision. And I say that because some traders, they might say, 25%, 30%, that is it for me, a loss of 30%, that is it. And so they will have a trailing stop that they set. There is other traders that are okay with 50%, and if it goes beyond that, then they close the trade. So it really is subjective as to what you're comfortable with. There truly are other traders that say, I got into the trade and I have $500 in it, or 750 or whatever. I don't feel like I'll lose all of that, but I knew that it was at risk when I got in, and they are okay with the whole thing, that is just their perspective. I usually think 50% is kind of the turning point, but it is a personal choice.
Yeah, good advice there. Let's see, Melanie wants to know, how do you choose, and this comes up, I think, every time we talk about options, how do you choose, which options to buy?
The strategies, for the most part, have a criteria. And so usually buy very close to being at the money, but maybe slightly out of the money. Because it's more expensive if you buy in the money, I usually go right at the money, which is usually slightly out of the money.
All right, and Samuel wants to know, what level category from level 1 to 5 does one belong when trading equities? Level 2. I'm not sure I understand the question. Do you understand the question?
I don't really.
Maybe you can rephrase your question, Samuel. I apologize. Peter says it is 7 a.m. in Australia. He's up early.
Oh,
Um,
wow. That's cool. Yeah, when he
all right,
said level 1, but I don't know about level 5. Normally, to trade options, if you're talking about a brokerage account, you have to be a level 2, but I don't know that that's what he's asking.
yeah, so maybe check. Okay, so that is, he said, what he is referring to. So different brokers will have different levels of option approval, depending, I guess, on your experience, how much capital you're working with, and some other factors, I guess, they use. I know because I used to work for Schwab, level 0 was covered options, and then level 1 was buying puts and calls, level 2 was spreads, and so on. So for your program, they would need the level of option where they were able to buy puts and calls, correct?
Right. Level 2 is usually, I think that varies sometimes in different brokers, but level 2 is usually what it is. Yes.
And Wendy, somebody had asked earlier, I didn't get to that question about trading these programs in retirement accounts. Can these be traded in an IRA?
Again, it's something that you need to check out. I have a number of traders that do trade out of their IRAs, and there's not an issue. And then I have periodically, once in a while, have heard from somebody that says, "Oh, it won't let me do anything except buy stocks or something like that." So I think you have to check.
All right, and let's see. Randy says, will you exit a trade during the adult stage if it hits support/resistance or a profit target? And
Uh,
or it says, and or will capture the profit and roll the option to another expiration period. So how do you handle?
Usually don't roll things over. I know what you're talking about. Usually don't do it, but when I am watching the adult stage or the strength stage, I am very aware of whether it's support or resistance lines, and watching closely if that looks like it's going to be when it hits that and is going to roll over, and often do sell at that point.
All right, fantastic. So we appreciate all the questions. Let's see, let me see, pick one more up here. Ron says, if we wish to trade daily, which time frame would you suggest we view different option symbols?
I'm assuming that you're talking about day trading, where you're in and out and in and out of trades the same day.
He says yes, he's agreeing that is what he is asking.
Okay. Personally, my favorite time frame is 10-minute, but I do know a lot of traders that trade 3-minute charts. So they are really focused on what is happening and the patterns and so on. And they just sit right here and that's what they're doing. And you do the same if it's 10-minute, but it's not quite as quick as a 3-minute.
And Keith asks a great question. How do you feel about today's market climate?
Well, I certainly love the fact that it was up so nicely, that was able to close a couple profitable trades. So that was great. I'm hoping that maybe this is the beginning of a period where there is probably still going to be volatile, but not maybe as crazy as it has been. I hope that this is the beginning a little bit of a strength stage. There's a lot of patterns that are confirming and suggesting that. So we will see.
And I know based on market conditions, some of your programs may trade more or less depending on that. Like next week, we've got a Fed announcement on Wednesday. How do you
Right.
handle events like that with your trading?
I usually don't enter a trade just before that, or where I feel like it's going to be affected by that. If, on the other hand, I was in a trade that was trading daily time frame, and I was in a solid pattern playing out, I would be aware of that, but usually the patterns will just ultimately continue. Maybe there would be a little bit of a pullback that day, and then it would go back and finish its pattern playing out. So I wouldn't enter a trade if the next day was going to be, Fed day. If I was in a trade and it was doing well, I wouldn't necessarily say, "Oh, I need to close that." I would just watch what was playing out and taking, because the patterns are stronger.
And kind of piggybacking on that, Keith wants to know, do you hold through earnings announcements?
Sometimes, if a company's earnings have been erratic in the past, then sometimes I will close before they do their earnings. If, on the other hand, the majority of the time they do well, then I might consider holding through that.
Okay, and we'll take one more and then we'll move on. And I think some of the questions will be answered here when we get into the everything that comes with these services here.
Sure.
Another question was, do you give actual buy signals? If so, do you give the close signals? So maybe just talk about how that works.
Okay. When I see a pattern form, I send an alert that says this equity is forming a P3 pattern on a daily chart and so on, and has confirmed. And then I give you the, I guess you would say, suggested strike, and don't pay more than this, call, and so on, and give the details in an email or a text message. And then when I see a pattern fail, or maybe it has earned 25–30%, and we've been in one of these periods where it's crazy up and down, I'll just decide and say, okay, it has earned 30% in 2 days, and it looks like this is questionable, and then I send out an exit, again, with the equity, the strike. Don't take less than this bid premium, and so on, and then you have that information. It's all your choice still, but you have the information.
All right, excellent, and thank you for taking the questions here. There was another question that's going to lead into what we are going to talk about next. It's a new trader wondering maybe what service might be best for him. So let's get into, I'm going to take the control back so you guys will be able to see my screen here. And we're going to talk about the Learn and Earn program. So you've got what we call premium and entry-level strategies. So the premium strategies you talked about with Gemini and Alpha, but you've got a number of different, we'll call entry-level strategies.
Mhm.
The premium level services, there's extensive education, support, there's more trading opportunities, as you'll see when we look at the entry level and the premium services, why that is. The entry level services focus on one sector, such as one ETF, as we'll see here. Anything else that you want to add that you feel is important there?
Not really. Again, as much of my objective is to be able to teach people to trade so that ultimately they get it. I think of these programs, all of them actually, as earn while you learn. And so that there is, books, and you're looking at what we're doing, you're looking at the charts and all of that. And so you're learning, but at the same time you're earning money.
And the premium systems, we talked about Gemini and Alpha, the slight difference between them, the focus, even though they're both trading P3 and 3.5 strategies, are these all Gemini and Alpha based on the same timeframes, or are they different timeframes as well?
Gemini and Alpha all trade daily charts, where the patterns are a little stronger,
Okay.
last a little longer.
And you see on the entry level systems, there's the Merit Gold, that trades the gold ETFs, silver ETFs, and maybe some of the mining ETFs. Is that correct?
Right.
And then your Smart Paycheck, which trades the SPY, that's the ETF for the S&P 500. The Merit Paycheck, which is the triple Qs, NASDAQ, our Merit Paycheck Diamond, that's the Dow. And this one's new to me, the Merit One ticker, that's the Russell, the IWM.
Right.
Is that a new program, or is that something that you've had?
It is relatively new. It is the youngest of all of the programs. Yeah.
So a lot.
And so these, based on the question you just asked a minute ago, these 5, the entry-level systems, focus on just that equity, but they trade 30-minute charts, 60-minute charts, daily charts. And so that periodically we could open a trade and just say in the Qs, and open a 30-minute chart, and then ultimately it's going through the life cycle and it's getting close to becoming an adult, and a 60-minute chart Q pattern then confirms. And so we might enter that and have the 30-minute be going into the adult stage, and then the 60-minute just really getting going, and going through the toddler and teenager stage and so on, so that you can have a couple trades going at the same time in the same equity based on a different time frame chart.
Okay, and kind of getting back to Keith's question, if he's a new trader, which program would you recommend for somebody who's getting started?
Brand new, I might say Alpha.
And why Alpha? What makes that one good for entry level or beginners?
I feel like Gemini, it gets in at the earliest stage of the pattern, and then it starts gaining strength. The infant is becoming, a toddler and so on, is learning to walk, but it's still going to tumble once in a while, just a little bit. It's going to get up and get going again, and then ultimately become this adult. But sometimes when there's a really down day or something, as far as the pattern, for new traders, that can cause anxiety. and make them nervous, and it's going down, you know, and upsetting. Where alpha is focusing a little bit more. It doesn't run through the whole pattern. It might not make quite as much, but it is focusing on the strength of the trade in the pattern.
All right, excellent. So hopefully, Keith, that sheds some light and gives you some guidance there. So let's talk about the premium trade services and some of the academics of these programs. So both of these systems you're trading big name companies, right? We're talking Bank of
Right.
America, Microsoft, UPS. There's no penny stocks here or anything like this. And you're buying straight puts and calls.
Right.
And you said buying about 30 days out, so you're giving yourself some time. Account size suggestion between 7,500 to 10,000, I think, depending on the program. And you're allocating about $1,000 to $1,200 per trade. Is that accurate?
That's about right. Yep.
And this is one that we talked about with Gemini, 4 to 6 trades a month. Again, depending on market conditions. Sometimes maybe you can talk about, depending on the market conditions, why your students might not see a ton of trades come through during a certain period.
Okay, well, you can certainly have a period like we have had recently, almost like the first couple diagrams that I showed you, where the market goes down and then it goes up and then it goes down again and so on. That when there is that kind of volatility and you have maybe an equity, I'll just say Boeing is created a new pattern and looks like it is getting ready, and it crosses over, and it's giving the very first hint of a buy signal. When you have a day like that where there's that volatility and the next day could drop down again, that makes it very difficult to decide with confidence that this is the atmosphere to open a new trade in. And so you really might hold off a little bit, waiting for a little bit more confirmation that yes, indeed, this pattern is going to play out. So in those cases, I err on the side of being conservative. I want to be sure, or try to be sure.
And that's really, you're just protecting the subscribers' accounts, right? We're
Right.
not just trading for the sake of trading. I
Right,
know people
exactly.
like to be in the market and have that action, but sometimes the best thing is just to step aside and until you get some clarity there. So you're holding positions about 5 days on average. The alerts come to your email or cell phone or both, and you have the daily market and position recaps, and we'll get into all the stuff that comes with the services here in just a second. The entry-level systems. You say here the theory behind trading all the merit systems is to focus on the P3 system on specific market sectors. So we went through the gold ETFs, the SPYs, the Qs, the Russell, and the diamonds. So you're just focused, let's say on the gold. In this case, just a handful of ETFs, gold, silver, mining stock, or mining ETFs. So these are really focused. They are not, whereas Gemini, Alpha, you're trading, looking at a universe of maybe 3,000 different, stocks. These are really focused on, so these are not going to produce as many trades as something where you've got a watch list of, 500 different stocks or whatever it is. But having said that, it's still trading puts and calls, account size recommendation, $10,000. You do have to have the capital because you do hold sometimes multiple positions, correct?
Right. Mm-hmm.
This one, again, trades about an average of 2 to 3 trades a month, depending, again, on market conditions, very important. And these trade on a variety of timeframes. Maybe you could talk about that a little bit. I know you touched on it earlier. You go all the way down to what, a 15-minute chart with these?
Actually, we don't. So, I mean, I can't say never, but in all the years, maybe we've done it twice or something. So
Mhm.
it really is 30-minute, 60-minute, and daily time frames. And so it is those that we focus on. And part of the reason I'm just will announce or say why we don't do the 15-minute is because a lot of times those are day trades. And so that if you get in and open a trade and close it in the same day, if for any reason a subscriber had done that on some other service or whatever, all of a sudden they're getting very close to having their account frozen for day trading issues. That if you don't have 25,000 sitting in your account and then you're trading funds, if you do more than 3 day trades in 5 days, they're going to freeze your account.
Mhm.
And so, like I said, I can't say I have never done it, but it's only a couple times in 15 years. So,
Okay. All right. All right. So before we get into the next part, I just wanted to talk a little bit about everybody, on this webinar is here for a reason, right? You're looking for something because maybe, everything's not going according to plan as far as your financial life goes. Maybe you're a new trader like Keith. You're struggling, you're not profitable, and you need help. Ask yourself, would this help? Would partnering with Wendy help you reach your goals? Maybe you've got years of experience, but you've never achieved the kind of numbers that our traders have been able to achieve. Would partnering with Wendy help? Would it help to see, how she's successfully been helping others like yourself reach their goals faster? Maybe you're trying to build a retirement. You've got 10 to 15 years left before you want to retire, and you realize, making 5 to 10% in a mutual fund isn't going to cut it, right? You're not going to be able to retire on time. Would getting a return over 50% or 100%, would that help? And for those that just don't have the time to do this yourself, maybe you work full time or you're busy running your own business. Would it help to have Wendy's trade signals sent directly to a third-party registered broker who would execute the trades for you on your behalf? Would that help? So as you think about those questions, let's go over everything that comes with these programs and the services here. Let me just go back. I want to go back and recover this. So they're going to get the educational material and talk about, I know they get the P3 book. What are the some of the other educational materials that come with these programs?
in addition to the book, which covers everything, this is not a book that is get this book and then get another book or whatever. This covers all of the details, everything. But there's also a newsletter that I do weekly that lists the equities that I see just getting ready to form a pattern. So as you've read the book and realize that, okay, I see the P3 and it's getting ready to do, you have a list of equities, which I figure that saves you some time that you can run through and start looking at your own opportunities. And then, of course, I am looking myself, and when I see something confirmed, then I'm sending out the email to you that, okay, this one has formed a P3 and is ready, and this is what you would buy and what you would pay and so on, or advise you to buy and pay.
So with these programs, both the entry level and the premium strategies, you get the direct alerts to your email or cell phone. So Wendy's going to tell you when a trade is set up, what to buy, where to buy it, and then when to get out. Plus, you get the daily market and position recap, so you always know where you stand. what positions are open that day, which positions may be closed that day, and anything that is being held currently. You get direct access to Wendy and her team. Any educated questions regarding the markets and the methodology, they're there for you. The educational material, I know there's videos they can watch, there's PDFs, there's the book, like you said, the P3 book that they get, the weekly market outlook you talked about, and you have a link to a chat room that they get. You can get their questions answered there, they get support, they can interact with some of the other traders there as well. And you do a teaching session, you call it Lunch with Wendy. That's Monday, Wednesdays, and Fridays, and I believe those are recorded. So if folks can't be there live, they can watch the recording. So this is a ton of educational material. You're really holding your people's hands as you walk through, and the indicators, how to set up your indicators, the settings that you use, and most of these indicators are most trading platforms will have. They're nothing esoteric or far out there. They're basic indicators most platforms will have, and you'll give them the settings for that so they can kind of hit the ground running on that end as well. All right, so let's get into the offer that we have for you guys today. For this webinar only, we're waiving the course material classes plus the enrollment fee. So for new students that qualify, and you do have to call us, and the reason you have to call us because we have to make sure this is a good fit for you. These programs are not for everybody. We do want to speak to you to make sure this is a good fit for you. For new students that qualify, Wendy is going to be completely waiving the $2,000 enrollment fee. She's going to give you 40% off the annual dues for being part of the exclusive Gemini and Alpha group. So if you subscribe to Alpha or Gemini, one of her premium services, you're getting a 40% discount, plus she's throwing in a year's worth of one of her entry-level programs. So the SPYs, the Qs, the Gold program, the Russell, the Diamonds, whichever one that you want, she's going to throw a year's worth. That's a $997 value, absolutely free. But you do have, anything else you want to add to this, Wendy? Any thoughts?
And no, this is a really great overall educational package, but at the same time, to be earning money.
Absolutely, and that's why you called it the Learn and Earn programs. It's a great way to get started. They get the signals, so they can use those signals while they're learning, so they can actually start earning an income while they're learning your strategy, which is a great thing. Yeah. So this is what you need to do, guys. You can call us. This is the 800 number here. If you're in the US, it's 800-883-0524. Again, we do need to speak with you so we can make sure that this is a good fit for you. The email is support@ffrtrading.com. If you're outside the US, if you want to use the 737-292-4425, again, Wendy is waiving the enrollment fee on these programs. She's giving a 40% discount off the annual dues of her premium strategies, Gemini and Alpha. And this is for the first 8 callers. All right, so you've got to call us. These spots will go fast. This is, in order for you to participate here, you purchase one of her premium programs at a huge discount, and she's throwing in one of her entry-level programs for free. It doesn't get much better than that. Everybody loves free. All right, so just give us a call, guys. Again, 8 spots. And the 8 spots really, Wendy, is because you can only take on so many new students and focus and work with them. I know you just, I guess, finished up with a group prior, so it opened up some spots here. But I know these fill up fast. Any other words of wisdom that you want to share with those that are in attendance here today?
I can't think of anything that we didn't really cover. I don't want them to go into overload or whatever, but this has been very enjoyable. I just would like to stress, I guess, that anyone can learn to do this, that if you're willing to give it a try, it is totally possible for you to be able to trade. You know, if you don't have time to actually be doing it, it's easy. What the information you get is easy to follow. But at the same time, I think of this as a earn while you learn, because my goal or hope is that you are going to absorb the information, become comfortable with it, and then you'll just be able to do your own thing.
All right, fantastic. And Anita had asked a question on the pricing. Do give us a call here, Anita, at the 800-883-0524. Again, we only have 8 spots. Give us a call because we have to talk to you first to make sure it's a good fit. All right, again, these programs are not for everybody, and we do have to speak to you and make sure that you know, this is a good fit for you. So give us a call. Again, these spots will go fast. Wendy, appreciate you coming in. Enjoy. I don't know what the weather is out there. Here in Orlando, we're having an extended heat wave. We've had you know, 95 plus you know, degree weather here for an extended period, which is a little unusual. What is it out where you are?
Where I'm at, it was like 82 today, but there's been a couple days earlier this week that were like 78, and that is lovely. It is just gorgeous. It really is. I feel very, very fortunate.
Yeah, we're ready here for the fall and winter here in Florida
The
for
fall,
sure.
huh?
All right.
Well, this has been fun, and truly I appreciate you all and everything that you do, and appreciate everyone who came to spend the time with us today.
And we appreciate having you. And guys, again, 8 spots. Give us a call, 800-883-0524. See if this is a good fit for you. We'll go over all the programs. We'll also go over all the performance statistics. We didn't get to do that today, but they'll go over a lot of these programs have been running for years, and they'll go over the performance numbers with you, the win percentages, the net profit, everything. But give us a call. We'll go through all of that with you, and then you can make an informed decision if this is something that might benefit you. All right, everybody. Again, thanks
Take
for
care.
attending. Wendy, thanks for being here. Look forward to working with you again. Have a great rest of your trading week, everybody. Take care, and we'll see you back in the next webinar.
Bye now.